Welcome to Fintech Daydreaming, the podcast that dives into the world of banking technologies and the ever-changing landscape of fintech companies. We bring you real-life examples from global and local thought leaders, as well as experts working within the financial industry, and seek out the best stories from the front lines of financial services innovation, where dreams of industry pioneers meet reality. Hosted by Paul Krogdahl and Ville Sontu. This is Fintech Daydreaming.
Welcome back, everybody. Another fantastic episode here of Fintech Daydreaming. And as is the case, every other episode is these days the Nordic Fintech Highlights. The episode that we do in partnership with Helsinki Fintech Farm, where we're looking at the latest news, trends, and exciting stuff that's been happening in the Nordics around the fintech scene. We look back at the newsletter that gets published by Helsinki Fintech Farm, and we pull out one or two interesting tidbits that we want to discuss a little bit further and do a bit of a deep dive into. Sometimes we pick things that we find interesting, and sometimes we pick what generally the world has seen as being interesting, but I'll be honest, it is generally what we pick. I'm Paul Krogdahl. I'm going to be your host for this episode today, but as always, I could not do this without my fantastically beautiful friend and partner in podcasting, Ville. So Ville, how are you? And did you manage to get home safely from Copenhagen yesterday?
Yeah, it does seem like I was able to get home safely, as you can see from the video. Yeah, so like you mentioned, we were in Copenhagen yesterday in the Fintensity event, where we were together representing another organization, Mobi Forum, in the Fight Club format that they have introduced into these conferences. And we were arguing against for the motion that embedded finance will disrupt the business models of banks. And yeah, we had a lot of fun during that session. And at the end of the day, I found myself home. So again, happily here. A little bit frustrated to see that when I came back, there's more snow and more cold, even though it's already April here in Finland. So that's the downside of living in this country, I would say.
Yes, and you know exactly the problems I've ended up in with having got so excited with the beautiful weather over the Easter weekend that I decided to change to summer wheels on our cars during that weekend, and then we get a whole load of snow. So I ended up being stuck at home and taking advantage of public transport, as I have done today. But we live and learn, and maybe, you know, all-season tires is what I need to have on my car going forwards. But you're right, the session, and this proves, dear listeners, that by the time we publish this, it's actually been a week, and we're talking about what happened yesterday, which to you guys, when you're watching this, is actually a week and a half ago. But we were in Copenhagen, and Ville and I think we did a fantastic show, Ville, in promoting the fact that we believe that embedded finance, as part of that journey to the wider platformification of the banking industry, will have an impact on banking business models going forward. So great show. So very good. Really enjoyed it. And a shout out to Mobi Forum, of course. And the foundation of the Fight Club that we had was the recent paper published by Mobi Forum around embedded finance.
Also a shout out to all of you there in the future listening to us. So good to be here.
Absolutely, yes. But let's get on to the show. Let's get on to the important stuff here and bring in Janne. I'm sorry, Janne, you've been sitting there quietly listening to Ville and I just talking chitter chatter for the last couple of minutes. Great to have you with us here again. And what's been happening in your life, Janne, for the last couple of weeks?
Yeah, had a pretty nice Easter. Went to the summer cottage and enjoyed some swimming in a hot tub and in the lake. So and the weather was nice in the Easter, so that was pretty good weekend.
So hang on, swimming in the lake. Are you one of these crazy Finns that do the ice swimming?
Yeah, sure. But if the hot tub is 40 and the lake is 0, so the average is pretty okay, you know.
Oh man, you're crazy. You're crazy. I keep looking at these Finns that keep jumping into the lake in the middle of winter, and I'd much rather be sitting at home in front of the fireplace with a whiskey relaxing. Although at the moment we are trying, aren't we, Ville, to abstain from alcohol for a longer period of time.
Yes, we are. At least trying.
Trying, yes. trying, not 100% succeeding, but doing fairly well. So, Janne, tell us, what has been hot, interesting, and exciting in the fintech scene for the last month?
Well, I need to disappoint you. Sorry. It's been a bit boring month. Not so much stuff going on. As we have already noticed in the past months, the funding is still a bit low. There's things happening, but nothing like mind-blowing mega rounds or something really cool. In terms of partnerships and news in general, it's pretty much the same topics now. Clearly, the open banking payments train is moving forward. There's more and more companies around the Europe, commerce companies exploring into the opportunities. The PISPs are constantly on the news, creating new business. We can also see Swedish companies being quite active in the UK market. And on the banking side, we have now in the past month seen Danske Bank in the news, and now they're even more and more on the news, constantly talking about new tech investments, new fintech investments and AI investments. And I have started to wonder that maybe all of the banks are doing that, but they don't. They find it so obvious that they're not publishing headlines for every single thing they're doing, but what do you think? Is it like from marketing perspective, is it wise for banks to promote that they are investing in new tech? Are the customers do they care about that?
I mean, I would say it's always good for a bank to be in the news for positive reasons rather than negative reasons. I mean, bad press of AML and fraud and everything else is always very bad for a bank. So having good news out there is good. And I think particularly for the incumbent banks in the Nordics, demonstrating that they are driving, digital change is good, as long as it's for the right reasons and going in the right direction. We want to try and make sure that it's not just digital lipstick on a analog pig, so to speak. So I think the news I've seen so far from Danske Bank has been good. The only risk you have with a lot of banks being very vocal around what they're doing is they end up with a public steering committee. Right. And we've seen banks end up in this situation in the past where they've taken on a large technology project or a modernization project, made it very open, very visible, and very transparent. And then as they start hitting problems because they've got a public steering committee, they are forced to continue on a path that they potentially do not want to continue on. And so therefore, sometimes it's maybe good to keep things a little bit more quiet, from my perspective anyway. What do you think, Ville?
And totally agree. And the same actually goes for the new technology, or let's call it the hype cycle, top of the hype cycle technology implementation. We are old enough with gray beards here to have seen many of these cycles. So whether that started from things like first versions of mobile banking in using WAP phones with black and white text interfaces and things like this, the hype goes away, and then there's a lot of people being very smart afterwards, saying that you invested in that and that actually didn't pan out. This is the way these technology cycles work. So I think many of the banks, having gone through many of these cycles with the different technologies, are realizing that it makes a lot of sense to invest in knowledge and capabilities in new technologies, but not going all out, maybe to be on the first wave of implementing each and every hype technology. This is especially true for things like blockchain and I would say to a certain extent now AI as well. I think many of the Nordic banks are realizing this in a very good way, in order to also avoid the public steering committee, like you said, Paul, because again, there's always a lot of opinions out there saying how things should be done better because the bank has been so transparent with the new technology. So yeah, totally agree. And again, I think as we've seen now, this digital transformation and revolution happening for the past couple of decades already, the banks are also getting more experienced working with new tech.
Absolutely. But I also think the other thing that you mentioned, Janne, is quite interesting as well. You're saying that there seems to be a regained growth in open banking again in the Nordics. And I think we're seeing this with a number of open banking fintechs. But it aligns up very nicely with what we started this discussion with, Ville, and the embedded finance and this sort of continued growth from PSD2 to open banking, from open banking to embedded finance to the platformification of the banking industry. I think we are seeing foundational changes that is going to drive, I think, some very big things going forwards. It's just not an explosive trend. It's a more slow trend, but it's going to fundamentally change banking. It's going to change how we as consumers interact with banking capabilities, general day-to-day transactions, and how we maybe view our relationship with our money and deposit holders going forwards. What do you think?
Completely agree. I think the discussion has been for a while now, has been about that. Well, open banking has been around for so long and we're not seeing any results. Actually, we're not just now starting to see the results. As with all these new trends and technology cycles, it takes a longer time for these things to settle, to actually be productive. And I think we're now at the point in time with open banking and open finance that it's starting to bear fruit. And it's quite clear as well that this is beyond just payments and account information. It's also about the customer data, sharing KYC, all these things that actually make things more frictionless and are contributing towards the embedded finance proposition that we talked about a lot, especially yesterday with you, Paul. So yeah, again, I think we're getting there, as usual, slower than people anticipated, but we are getting there.
What do you think, Janne? I mean, what's your view on this growth of open banking, embedded finance?
Yeah, I think now we're seeing in practice kind of maybe the first and the obvious cases, like we were talking about, basic account data applications and open banking payments. So now they are becoming reality. And then the next level, when we talk about some sort of, more like banking as a service and more complex open banking solutions. So that's, yet to come. So, slowly but steadily we are moving forward in that field.
I actually will sort of steal the limelight for a minute and go into the news article that I picked out of the newsletter, because it lines up very nicely with this whole discussion of embedded finance and open banking. What caught my eye, obviously being a Norwegian passport holder, was the news that came out of Norway around Neonomics and Bislab creating a partnership, and Neonomics being a open banking fintech, and Bislab also, but Bislab being more focused on data. They are coming together to create some new offerings, again focused on embedded finance, but around credit scoring and credit validation, which I think is really interesting. I think it goes back to demonstrating again, Ville, some of the arguments that we put on the table in the Fight Club yesterday in Copenhagen around how the trend is going to be about financial institutions and fintechs combining capabilities to deliver new value to consumers and to other financial institutions to enrich customer lives. And we all know, credit scoring, understanding people's credit, and organizational credit as well is very relevant and interesting, and drives a risk appetite and risk profile for most lenders. So I think this is going to be interesting. I know Bislab is very Norwegian, so it'll be interesting to see if this partnership will actually push these capabilities out into the wider Nordic market and beyond, because I know Neonomics is very much focused on growth out of Norway. What's your take? What's your view? I mean, Janne, you've been playing with these guys for some time, so what do you think?
Yeah, actually, I read the news. I was wondering, like, what's kind of the additional data they are providing, because I've been Dora has been the FIDA has been a big topic, and we're talking about having the you know, the open finance data, like a 360 overview on the accounts, and based on that you can do better credit scoring and have more data. But then on top of that, I think there's still also outside of that quite much of sort of public information you could integrate into you know, tax records. Now in Finland we have the positive credit register, and there's so much more stuff you could integrate into, and definitely that's where the future is, and I believe there's also quite much you know, national aspects in that, and of course we have local players working for providing the additional data, and of course the banks then can you know, provide also some premium data, but that's definitely, if you can crack that and do it in many markets, so that's I think the winning formula.
I think from my perspective, I would like to see closer collaboration here between what they are doing around this credit space, connected with the sort of, can I say, growth and demise and potential growth again of buy now, pay later and variations of buy now, pay later. I think they will be valuable to have the ability to do a better credit evaluation of consumers at point of decision when it comes to buy now, pay later. I mean, we've seen a lot of issues there. So from my perspective, there is a wealth of opportunity for fintechs along with financial institutions and banks to look at how do you create a better holistic capability around future payment options like buy now, pay later. But what do you think to this news article, Ville?
I mean, everything you said, of course, makes a lot of sense. And this move by Neonomics and Bislab also makes sense from their business perspective. But not to say anything about how they actually are going to implement this and how these customer flows will look like from the end user perspective. But this did kind of bring an echo to my mind about a story we've been having in the news for a couple of the last month or so that came from the US, where the car manufacturer GM was caught basically collecting a lot of data about the cars and then selling that data to insurance companies, who then in turn raised the insurance rates of the drivers of those cars just suddenly out of the thin air as far as the driver or the owner of the car was concerned. This, of course, caused a lot of controversy about what data is being collected by cars without our explicit consent, and this kind of resulted in a fairly quick action by General Motors, actually. So they have now informed that they have stopped this business of selling data to data brokers and insurance, and through them to insurance providers, due to the feedback that they got from the market quite clearly. So it's funny how this story brought that story a little bit on a different side, but the same topic. So again, when you have these data refinement companies that are basically making their business out of selling trust data, credit score data, all of these things, I wonder what is the best way to implement customer consent and basically informed consent rather than just agreeing on terms and conditions, like was the case with the GM case as well. When you signed up for this, I think it's called OnStar or something, service by GM, you were consenting for them to do that. So they had the legal right to do it from that perspective. But from a customer standpoint, if the end result is that you're getting a 50% raise in your insurance rates, that's not great. And you really didn't have informed consent. So we're going to have a lot of these discussions now that we're going to have all of this financial data, especially floating around due to this Open Finance Act, like we talked about earlier. So yeah, interesting times.
You do
Luckily,
actually bring
Europe
up
is the superpower of regulation. So now we also have the new Data Act, which is quite heavily focused on also the IoT data, such as, you know, the cars and whatever we have. But yeah, of course, in practice, the consent management and how that will turn out. So that's of course a big question.
Yeah. So Paul, so talking about cars, we worked on car IoT a little bit, and we learned a lot about all sorts of scary stuff that the cars are collecting, including like what is the volume of the music you're playing, what music you're playing, even, you know, how many percent your windows are open. All of that data is being collected by the car and being aggregated by these car manufacturers. So again, a bit of a side topic, but still fascinating to understand that what can be done in this space. And I think the regulation is definitely needed here in order to have proper privacy protections in place.
You do bring up a valid point. I mean, yes, in Europe, we've got GDPR, which helps us to a certain degree around this, and the US doesn't. But even then, I mean, we're seeing loopholes and issues even with GDPR, and we all fall for this when you go to any website where the first thing it brings up is, you know, do you consent to this? Do you not consent to this? And by default, most people don't sit down and read through everything and just click the yes, I consent, because they want to get to the information and the data behind, rather than spending 3 hours going through a detailed GDPR consent process. And I think some providers are very good. They do give you the option of saying, I only consent to mandatory or required. But even then, how many people actually do sit down and go through to see what am I really consenting to? And to that point, I'm sure most people that buy a car and end up connecting their car to their phone, to their Bluetooth, to the whatever else is, they just consent to everything without having any real understanding as to the implications of that. And if the end result is, oops, your insurance suddenly doubled, what recourse do you really have? You consented to it. You hit the button. You did consent. The fact that you didn't read the small print. Do we need another regulation in Europe to cover that? And before you know, you've got regulation on regulation on regulation, and people are always going to find ways around it. So it's a difficult rabbit hole to fill, right?
It is. I just can't wait for the somebody to come up with a correlation on what kind of music you're listening to and how loud compared to how aggressive your driving is, and therefore how many crashes do you make. And then we're going to get a tax on aggressive music or something. So it's fairly this dystopian future, I think.
Or it changes slightly differently, where, you know, you're cruising down the motorway listening to Iron Maiden or Metallica, and the car manufacturer suddenly says, you're driving too aggressively. Here is some Vivaldi for you to listen to instead. Yeah, it's an interesting future we're heading towards. But we digress. We really do digress. So, dear listeners, sorry, a little trip there down the lane of cars and insurance. But Janne, what news article tickled your fancy from the newsletter this time?
So yeah, picked the news on Ingka acquiring the rest of Ikano Bank. So not a huge news itself. So Ingka Group is the one who is holding IKEA and the stuff around that, and as some of you may know, Ikano Bank was founded by Ingvar Kamprad, the founder of IKEA, in 1995. It's actually funny because their focus was already back then to be funding you know, IKEA purchases and related stuff. So now we have all the buzz about embedded finance, but you know, it's a 30-year-old thing at least. But yeah, basically it's moving the ownership kind of within the group, but does it have a bigger meaning? What's coming next? That's probably the question. There were some comments about providing better services, expanding new digital banking stuff. So that's the big question. So far, the discussion about banking innovation has been a little bit like, hey, who is going to disrupt? Is it going to be the fintechs? Is it going to be the big techs? What if it's a big retailer like IKEA? Because, you know, they have a history of being innovative. They have a lot of resources. They have billions of customers probably. So what could they do next in terms of embedded finance or just generally banking services? If you buy everything from IKEA, you get the funding from there. Why don't you get, you know, the mortgage for the house at the same stop? So that's really interesting. And of course, there are many similar players to that who has the potential. And of course, then we've seen already in some other nations, you know, these big retailers like in China, they have jumped all into the financial services. So that's interesting to see what's going on the retail side in Europe. What do you think?
I think
Packed banking.
Yeah, so I think we've actually seen many of similar stories lately. Basically, these financial services arms of existing retail brands and other services being either spun out or restructured in a way that allows them to, I would say, grow beyond that specific business that they were started around. So in this case, financing IKEA purchases and related items, and then making sure that you have a very efficient acquiring infrastructure in IKEA's. I mean, that business was done well, as far as I can see, by Ikano Bank. But now, like you said, Janne, now they have a clearer mandate to go even outside the typical IKEA customer and offering a broader portfolio of financial services to a broader customer base. That's my interpretation of this move, moving them to the group level, like they're doing in this case. Another news story from, again, a few months ago, actually, was that Sony sold off their payments business that was started around basically PlayStation purchases. So that business, by the growth of PlayStation and the online payments on the PlayStation Store, grew so much that it was kind of outweighed in the Sony organization, and they sold it off to an external entity. So yeah, again, seeing this financial services business grow online, built around these specific offerings and then being spun out, seems to be a repeating pattern. What do you think, Paul?
I think there's actually, if we look at the news of the last couple of months, actually more than that, but there's been an interesting sort of movement of retail companies in the banking space. I mean, you go to the UK, Tesco's recently sold off their banking arm, right? Deciding that they didn't want to continue with that. We look here in Finland, and S Group has actually been very successful in spinning off S-Bank from their loyalty program initially around their retail chain, right? So I think we're seeing this sort of amalgamation and some shifting that's happening within sort of retail versus banking, and taking advantage of your loyal customers and those sort of things. So I think we're going to continue to see this, and I think the move by IKEA to bring it up one level makes absolutely sense, because they can expand on that, exactly like you said, Ville. And interestingly enough, I mean, a couple of years ago, IKEA actually partnered with one of the large construction companies in Sweden to supply IKEA homes, which was, the notion of flat packed houses at a cheaper level. So that lines very nicely up with what you're saying, Janne, around, IKEA or Ikano offering mortgages and other capabilities. And I think, sometimes we talk about the next generation of consumers in the banking world. Less and less of them will seek to get mortgages and car loans. They're more interested in mobility and, a safe place to sleep. So maybe there is something here for IKEA, where IKEA is starting to think around, or Ikano is starting to think around how do we satisfy the financial lives for the next generation of people. IKEA have always been very good at, like you said, innovating around how do we help the general Joe Blog on the street, right? So I agree. Very interesting stuff. How about you, Ville? What got you excited from the newsletter this time?
Yeah, I mean, I guess you would guess that I'm quite interested in neobanks at the digital banking space. If you've been listening to this podcast, you will know that. So what caught my eye, of course, was that N26, the German neobank. I guess we couldn't call them neobank anymore. They've been around for a while. But N26 is launching instant savings in 13 new markets. And the reason why that's interesting from a Nordic perspective, of course, is that many of the Nordic countries, including Finland, are in that list. So why is this interesting? I became an N26 customer a long time ago. I got the card, I got the app, and then I quite quickly realized that, well, this is just a basic account with a debit card associated with it. And for a long time, nothing really happened in that space. And I think that kind of sentiment has been repeated in a lot of people that I have talked to, and then looking at the N26 numbers as well, they have a bit stalled on the innovation that they had a head start with, especially considering the digital and neo banking space. So, and to a certain extent, you see players like Revolut overtaking them in terms of offering more exciting offerings and expanding their portfolio with external services, becoming a super app, all of those things. Revolut has been executing quite fast. Seems like N26 was being left behind a little bit. Now, this new launch of instant savings is actually quite, I would say, invigorating for N26 for a couple of reasons. They're offering between 2.8 and 4% interest rates on savings, and the interest being calculated on a daily basis and then paid out on a monthly basis. This is quite competitive. If you look at any of the mainstream banks in the Nordics and especially in Finland, the high street banks or the kind of bigger incumbents, they are offering these types of rates only for fixed deposit savings at the best. I don't think many of them actually even reach the 4% interest rate, even with fixed deposits. So that becomes interesting, especially when you consider that the interest is calculated on a daily basis without any cost related to it. The other part that's interesting, if you compare this to what Revolut has today in the Nordics, I mean, Revolut offerings are a little bit different in different regions. So UK is very different from the Nordics, but Revolut, for example, here in Finland, is offering so-called flexible accounts, which for all intents and purposes are portrayed as savings accounts in Revolut. And they offer similar kinds of interest rates between 2.8 and 4 actually up to 5% with different currencies. But there's a key difference there. So the Revolut flexible account is actually based on something called money market funds. And that's all fine and well. They seem to be fairly stable financial instruments as far as the customer is concerned, but they're actually not part of the deposit protection scheme by the government and the central banks. So if something happens to Revolut, then you will not automatically be compensated by the central bank for the deposit that you had in that savings or in that flexible account. Now, the N26 instant savings account is actually guaranteed by the deposit protection scheme, in this case in Germany, because that's where their banking license is, up to 100,000 euros. So all this combined, it's quite an interesting move by N26 and definitely puts them in the interesting category again after a while of being a little bit more quiet, at least here in the Nordics.
Just a little bit of clarification, Ville,
yeah.
Because listening into what you said there, so one of the differences is that N26 pays the interest monthly, whereas I believe Revolut pays it daily.
Yes.
Yeah. And secondly, I believe that Revolut advertises the accounts as a savings account, right?
If you actually look into it, so in the app itself, it's under the category of savings, but they are very clear to make sure that it is actually labeled as flexible account. Because again, if you as a regulated bank would say that it's a savings account, it has a very strict definition in the regulation. So you cannot say it's a savings account because it actually is this money market fund that pays you this daily interest. So yeah, but that's interpretation of how you want to see the messaging from Revolut.
Right. Yeah.
Thanks for the info, because I have money in the Revolut flexible account and I didn't know that.
So back to the consent thing, right? We take things for granted. We move so fast. We want instant gratification. We don't read the small print. We just go with what it says on the headings and hope for the best.
Indeed. And to be fair, there's another neobank also from Germany, Trade Republic. They also offer a 4% interest rate on the checking account balance, which is also protected by the insurance. So seems to be that in Germany, these digital banks are coming up with this 4% interest rate quite across the board. N26, of course, is matching that and launching that in other markets as well. So again, interesting times. I'm really looking forward to any of the incumbent banks really to do anything close to this for their customers, because they have also picked up their interest rates for sure, but nothing close to these percentages.
Yeah, my question was that do they actually need to? Because neobanks, I don't know if their main interest in the high deposit interest is it to get more deposits in order to run their business, or is it just kind of an easy tangible way of doing customer acquisition and marketing by promoting we have higher, or we have the best rates. And then if you think about traditional banks, I don't know, does it make a difference?
That's a good point.
Yeah.
And now all the bankers listening here in the Nordics are saying that, do you remember the Icelandic banks that came before the crash in 2006 and 7 with this exact same proposition, saying that they're paying high interest rate on daily deposits, and it's protected by the deposit protection scheme. And then, of course, the crash happened, and the Icelandic banks pretty much defaulted all of them. So all the bankers will say that, yeah, we will see these kind of players entering the market every now and then, but we're fine sitting where we are. So yeah, that is also true. Another example that came to my mind was the Goldman Sachs entered the UK market with the Marcus savings account some years ago with the exact same propositions. Basically, they just offered that high interest savings account. That was during the time when we were in negative interest rate environment by central banks. So it was really standing out as an offering in the UK. That quickly collected a lot of deposits, but now they've been kind of scaling back on the interest rate as well. Again, another example of entering the market with an attractive product.
I'm wondering though, I mean, thinking a little bit to what you were saying, Janne, and the incumbent banks, and think a little bit, I mean, we're focusing now on Nordic banks or maybe even just Finnish banks. And I'm wondering whether it comes down to risk profiling and risk appetite here as well. And also, consumers are no longer putting all their eggs in one basket. I mean, most of us, if not everybody in Finland, have got a relationship of one form or another with multiple financial institutions. I mean, like you said, Janne, you've already got money with the Revolut savings account, whether you call it a savings account or not. We've had discussions in the past. Both of you have got the Revolut metal card. You do have relationships with some of the incumbent banks, just like me. I mean, I've got a Revolut account. I've still got an account in the UK from when I lived there. I've got an account in Sweden from when I lived there. I've got a relationship with one of the incumbent banks here in Finland, and I hedge my bets across all of them. Where am I going to get my best returns on my money? I do some retail investment through my major bank here in Finland. I have some money in the savings account with Revolut, whether we want to call it a savings account now or not. So maybe the incumbent banks here, to a certain degree, is also saying, what is the return on value to us in jumping into this space when maybe we can continue to drive value to certain demographics in Finland that we already are, be that, private banking space, wealth management, or other capabilities, rather than putting up interest rates on a daily basis and paying out daily basis to consumers. Maybe the value is not really there. I'm not sure. This partially goes back to the discussion again we had in Copenhagen yesterday, Ville, right? Around the consumer votes with their fingers and which apps they want to drive and use. You sit in a bank, you sit in a Nordic bank. What's your view here, Ville?
I think we're seeing the boundaries between the banks being lowered constantly. Like you said, Paul, both you and I have accounts in multiple banks across Europe. And what makes that easy? With SEPA instant payments, you can move even fairly large amounts of money instantly between banks. So if you get a nice interest rate somewhere for a daily balance, then you might be doing the kind of your own little cash management setup where you move the money to where it's needed and where it gets the most interest. And this is all possible almost in real time due to SEPA Instant and these passporting capabilities of financial institutions across the European Union. So yeah, it really seems to be that there's more choice for consumers. There's good options for you to do what you want with your money, and you're not bound to a single financial institution in the same way. Of course, you need to have where your salary is going and probably where house loan is. So that's kind of your main bank, but that doesn't mean that you have to get everything from a single place. So I think it's we're really seeing this movement happening for the past 5 years. I mean, 10 years ago, you wouldn't even imagine doing anything like this unless you were a large corporate, of course. But yeah, I think it's all good for the consumer.
You're absolutely right. And we've got instant payment coming around the corner and followed by the digital euro and everything else. So I think these boundaries and borders are going to very quickly disappear and break down. So, but that was an interesting roundup of some of the interesting news articles and highlights from the newsletter that you've published yet again, Janne. The other thing that I think we should do as courtesy is you've got a fantastic event coming up.
Yeah.
You must highlight it again, right? We will be there as Fintech Daydreaming, but why don't you share with our listeners the sales pitch?
Yeah, of course. So Nordic Nordic Fintech Summit coming next month, May 16th. So it's the main event in Finland, leading Nordic Fintech event. We have two main themes: digital banking, digital payments. We have two stages on one full day. Then we have a pre-day with some nice networking, AI workshop. And then we are also particularly known for our after parties and fun side activities and so on. So really looking forward to have you all there, all the listeners, and remember to use the promo code Daydreaming if you haven't bought your tickets yet. So NordicFintechSummit.com.
Fantastic. And as you are in such high spirits, Janne, and we do not want to break with our tradition of a good but bad joke, do you have a joke for us this week?
Yeah, I have a joke. It's in honor to Ville's new job in CBDCs. So, why was electronic money and digital currency not a very productive team?
No idea.
No idea.
They never knew who was going to be in charge next.
Oh my God.
Oh no. Okay. Yeah.
Yeah, good but bad but good. Okay. I'm not going to apologize to our listeners because the jokes are going to get worse and we continually try our utmost to find the bad jokes, but we're doing good. We're doing good here. Thank you very much. But Janne, if people want to know more about the newsletter, where can they find it?
Yeah, Helsinki Fintech Farm on LinkedIn, or then our website helsinkifintech.fi. You can subscribe for the newsletter. So we send the regular monthly update on what's going on in the Nordic industry, and then a lot of other stuff. And then you can also feel free to hit me up on LinkedIn or any other channel.
Fantastic. And Ville, if people want to talk more with you, where can they find you?
You can find me on LinkedIn. I'm also on X, not active anymore after all the changes in that place. But on X, I'm VILLE_S. And of course, LinkedIn, I'm easy to find. So hit me up.
Fantastic. And as always, I am very active on LinkedIn, just like Ville. I do have an account on X, or what used to be Twitter. Don't really use it, but you can find me on LinkedIn. And obviously, as always, you can find the podcast on LinkedIn, on X, on Instagram, and also on our website, fintechdaydreaming.com. Until next time, hope you've enjoyed this. As we always say, please hit the like button. Please leave us a comment. Hit that subscribe button. And do us a favor. It's just been Easter. Share the podcast with 2 of your friends. Just 2 of your friends, and tell them to share with 2 of their friends, and hopefully we can continue growing, because the more listeners we get, the more excited we get, and the more we want to bring to you from this wonderful world of fintech and banking technology. We've had a great discussion. Hope you've enjoyed the news articles. Hope you've enjoyed the newsletter. Until next time, this has been Fintech Daydreaming.
This is Fintech Daydreaming.